I can't raise any money. Nobody's taking me serious. I keep hearing no's. I can't get the value that I want. Whatever it is, I've heard every single one of those and more. If that sounds like you, I've got a treat for you. In this week's episode, we show you how to do something that anyone can do, but very few do. And it's a way to rent the reputation, relationships, and results of high net worth people, ultra successful people, and how to get them interested in lending you their reputation, relationships, and results. All this and more coming right now. Let's get into it. Hey, welcome to another episode of Making Billions. I'm your host, Ryan Miller, and today I have my dear friend, Callum Laing. Callum is the founder at Veblen, a company that specializes in helping people to get prestigious boards or fill their own prestigious boards with other elite members. Not only that, but Callum is an M&A master who has completed over 100 M&A transactions with nearly all reaching public markets, while also being the author of 4 business books such as the Boardroom Blueprint. So what does this mean? Well, this just means that Callum understands how to massively accelerate your valuations and capital raising efforts by leveraging the power of the boardroom. So Callum, welcome to the show, man.
Thank you, Ryan. I've been looking forward to this for some time. It's big props to you for what you've built here. I think both you and I have chosen to go after an audience which is driven and ambitious, and because those are the coolest people to hang out with. The problem is they don't have a lot of patience, so you have to add value all the time, and you're absolutely killing it with this podcast. So I'm thrilled to be on it.
Thank you. And having you on the show is certainly going to add a lot of value. We've been very fortunate to be in the top 2%. It's all because of amazing guests like you, just adding value and spreading the love. So you're spot on. This very ambitious group. I just got a text today from one of my earlier guests who said he raised a lot of money after somebody heard him on the show as institutional investors. So that made my day. Not why we come on the show. We just want to spare love. We just want to add value. And if that results in more value being created in the world, well, then I think we win on both fronts in that area. So let's jump right into it. Let's hit them between the eyes, Callum. How did you even get into this sector of helping people to get on boards, M&A? Maybe walk me through that.
Yeah, so look, I've been an entrepreneur for 25 years. Got into the public markets about 10 years ago, started taking companies public. And as you mentioned, we've taken over 100 companies public. And because of that, I kind of ended up sitting on a lot of boards and advising a lot of boards and hiring a lot of board members. And when I was a young entrepreneur, I always wanted to sit on somebody else's board, mainly because I wanted to hang out with more experienced people than me and see how other people ran their business, because I couldn't figure out how to run my own business. So I thought if I could peek into somebody else's business, that would be very useful. But at the time, I didn't know anyone. I didn't know how to get on boards. And then when I did get on boards through taking companies public, I started getting quite frustrated. I got frustrated that there were a lot of people on boards that were on there for the wrong reasons. They were kind of on there for their own self-aggrandizement. And yeah, they weren't looking after all the shareholders. And it just kind of got frustrating. And I realized a lot of people were on boards because they knew the right people. They'd gone to the right schools. And it's kind of, you see, there's always talk about diversity on boards, and very little has actually changed. And it's because boards don't want to take risk. And so you end up with the same types of people on boards. And this is a global problem. All over the world, you have this problem. I can live with that. What was really frustrating to me as an entrepreneur was seeing really good talent being overlooked because they hadn't gone to the right schools, because they didn't know the right people. And that's just, that's Ryan, like, it's just frustrating seeing resource being underused. And so because I was kind of on the inside, and look, I totally understand why people have kept boards so exclusive for the last 100 years. It's a great lucrative game. You don't really want people to come in and disrupt that. But because I was on the inside and because I had this opportunity, a couple of years ago, I set up this business called the Veblen Director Program. And it was really to help first timers that don't fit the profile of what a typical board member looks like, but can add value. So to teach them the real practical stuff, not only of how you get your first board seat and how you get onto the board ladder, but also then how you add massive value when you're a board member. And what I realized when I looked around at what was out there, we've all seen those courses for like sort of getting directors' certificates and stuff, but they're kind of largely irrelevant. What they do is they teach good corporate governance best practice for an S&P 500 company, which may well be fascinating. It's absolutely irrelevant to 99% of businesses out there. In fact, if you tried to apply good corporate governance for an S&P 500 company to a small business, which is what the majority of businesses are, you would kill it. So nobody actually, and by the way, like boards don't care whether you've got a certificate or not. That's not what they're interested in. All they care about is, can you add value? So yeah, two years ago, I set up this company. It's been hugely successful. Again, it's not my day job. I have teams running it. But we've got well over 200 members that now sit on over 300 boards around the world, and just doing incredible stuff. So it's a fantastic network, and yeah, I'm very, very privileged to be a part of it and be able to tap into that network.
Yeah, and you're calling all the way from Singapore to tell us all about it. I love it. So, one of the things, and often, and you can keep me honest if you think this is not the perspective you have, I'm okay with that. But a lot of people ask me my advice on raising capital, and we teach a lot of strategies on that. And one of them is getting on boards is one strategy to raise capital. That is not the only reason why you go on capital. And please don't join a board just to get something. In fact, the reason why I recommend it is because that's a place where you go to give. Often getting into a room is kind of a waste of time. You can spend a lot of money on, I'm not talking about boards, I'm talking about networking events and these other rooms that you get in. They charge people insane thousands or tens of thousands of dollars to get in a room with the chance that a rich person might be there and you might raise all this money. But we know better than that. Often, not all events, but most are just, they're a cash grab by the organizer, and I'm telling you how I really feel. But boards are very different, and it's a great strategy not only to get on boards for the place of just not a self-aggrandizement, but if you can add value, then you're starting to emphasize the 3 R's, which is reputation, relationships, and results. And if you can get on boards and demonstrate that and build relationships with these people by adding value, that's a great place to continue to grow R3. However, if you're a fund or an investment vehicle or really any business, building your board also matters. So building a board or sitting on someone else's board, this is a very important thing. This is exactly why I loved having you come on the show and all the things we're going to talk about. So that being said, as I'm going on about boards, in your opinion, so you spent some time, you got on boards, you observed a lot of things. From your perspective of placing 200 people on over 300 boards, why do people do this? Why do they try to get on boards? What have you seen?
It's because they listen to you, Ryan, and they.
You got me on that
one. Look, I think there's a number of reasons. Yeah, as I mentioned, when I was a young entrepreneur and I wanted to get on a board, what I wanted to do was, and this is like genuinely why I encourage every entrepreneur to go and sit on somebody else's board, is because A, you get to hang out with some amazing people. B, you get to see into somebody else's business. And especially as an entrepreneur, your own business is held together with chicken wire and masking tape, but everybody else's business looks so perfect from the outside. So when you go and sit on the board, not only do you discover that every business is held together like that, but you realize that they've solved some problems that you haven't solved, and you've solved some problems that they haven't solved. And that's where you start to add value as a board member. Look, it can be incredibly lucrative as well. And I'm not just talking about the salaries that you get paid as a board member, but just the opportunities that you get because you're a board member, the access to deals, the insights into what's going on in the industry sort of 6 to 12 months down the line. And then I think there's kind of a status play, which I'm not coming at it from an ego perspective, but the number one thing in business is trust. Like if you're trying to raise money, you can't do it without trust. If you're trying to sell products, if you're trying to convince somebody to come and work on your team, to give up their job and come and work with you, all of it comes down to trust. And people are looking for shortcuts to give them that trust about you. And so if you say, hey, look, I'm just a first-time fund manager or I'm a first-time entrepreneur, there's not a lot for them to hang their trust on. Whereas if you can say, hey, I'm doing this, but I've got these people on my board, I also sit on the boards of 3 or 4 other companies, then there's so much more status and credibility that comes with that. And I kind of joke that like in the Instagram world, standing next to a Lambo with a nice watch gives you status. But in the world of LinkedIn, which is where our world is, the ultimate status hack is announcing that you've just joined the board of such and such a company. And so, yeah, look, people join for different reasons, but I just think it's such a such a power move to get ahead in your career.
Yeah, I absolutely agree. One of the things that we found, echoing on that, so sure, you can get status, but the real thing is validation of trust. And typically getting on a board is one of those things that anchors the trust that you have, and maybe your mom tells you that as well. But for the rest of the world, they're still figuring out what it is that you can do and can they trust you to get it done. And often, like you said, that's one of those great validation moments is when you say, I'm on a board of Disney or Tesla or SpaceX, just to use crazy terms that most people know around the world. But then also, what if, and then on my board, I have guys who are from Disney and SpaceX and Tesla. And the reason why I want to bring this up, so maybe I'm jumping the gun on this, but I love this topic. And this is one that often gets glossed over to people's detriment. So this is one of those, if you know type of things, is saying this is probably one of the greatest things you could do to get people to actually take you seriously if you're just starting out. And it's also one of the great things to do if you're not starting out, is to build your own board and just watch this thing take off to the moon. So that being said, raising capital, since this is a subject, there's many reasons to do it, but raising capital, if you're building your own board, you can work with Veblen or maybe people, or either way, it's important to, so one of the lessons that I would take away from this is make sure that if you're hiring people to come on your board, make sure that they've raised a lot of capital. And then also getting on boards, this is the place where you show up to give. This is a place where most people show up to give. So if you can get on boards, however you do it, whether they work through your company or however you get on boards, like you said, there's certificates out there. No one cares about that. I don't think. But getting on a board, and ultimately the point is getting in a room where everyone shows up to give. That's the room that everybody wants to be in. If you're looking at it just from a quasi virtuous but self-interested thing, getting on a board, being in the room where people are there to give, that is absolute key. Would you agree?
Yeah, I mean, we call it aligned self-interest. Like the more successful I can make the company whose board I'm sitting on, the more successful I become. Compensation is typically tied to the market cap of the company. So the bigger I can make it, the better. But look, I mean, it's such a truism and everyone talks about it, but yeah, the people that get ahead are the ones that help others get ahead. And,
Agreed.
If you can, we've all got I think a lot of people look at boards and say, well, what could I add? Or, am I ready to do this? And I think, the thing, we talk about companies like Tesla and Disney, and those are all great. That's not where anyone starts. And anyone listening to this podcast is clearly somebody that takes their own personal development seriously. They're ambitious. They're driven. They want to get ahead. They will have a unique view of the world. They will have unique contacts. Even the location that you're living in can be of value. So we're not quite onto the how yet, but just as an example, if you're living in Toronto and you apply for a board seat in Toronto, you're not offering much value other than everyone else in Toronto that's applied for that board seat. If you apply for a company overseas, you've got a bit of mystique about you. You've got something interesting about you. And if a company is overseas is looking to expand into North America, then you've got unique on the ground knowledge, regardless of what your background is, regardless of your current business experience. You've got knowledge that they don't have, and that's valuable. And so I think, we always tend to do this, especially when you're ambitious, is you look at the people that you admire the most. So you kind of look at people that are on boards of Tesla and Disney and go, well, how could I ever compete with that? Your job isn't to compete with that. Let's get on the bottom of the board ladder first and work our way up, because I absolutely guarantee you, if you're listening to this podcast, there is a small company out there somewhere in the world that would kill to have your viewpoint, your knowledge, your experience, because you can save them years. And one introduction you could make could completely transform that business's trajectory. Look, it's very, very doable.
Yeah, I love that. And one of my favorite times in my career was when I was fortunate to support the Calgary Philharmonic Orchestra, the board of the Calgary Philharmonic Orchestra. That was so much fun, and literally everybody, just to give you an insight of what to expect for those of you who've maybe never done it or considered it or wherever you're at on the spectrum. Honestly, it was so fun. And it wasn't a ton of work, but it was highly concentrated amount of when we worked, head down focus. And I'm literally shoulder to shoulder. If any of you know Calgary, Alberta, Canada, big oil town, everybody was an executive at some oil company, most publicly traded. And I just finished grad school, and I was like, wow, I would never get into a room with people like this, but I am in this room. And so I'm going to give it everything I have. And you just add value and you make a ton of friends. And honestly, I've always become a fan of the Symphony as a result, because you got to see what really, how the business really works from the board level. Now, my question for you then is, if there are people who are, let's say, building a fund or a family office, or maybe they want to get on the board of someone like that, how do you know when it's the right time to build your own board?
Yeah. So look, I think there's two parts, and I kind of have if you look at our base, it's kind of split 50-50 between executives that just want to develop their career and entrepreneurs that want to grow as entrepreneurs. And one thing that I've been saying to entrepreneurs for as long as I can remember is A, get on somebody else's board, which is kind of what we're covering, but B, build your own board as quickly as possible. And so I think the stat that really stands out, globally, there's 330 million for-profit businesses. Less than 1% of those businesses have an active functioning board. So, of course, all the public listed companies do, all the big companies do. Every single successful company you can think of has an active functioning board. And yet, if you look at the average small business that you know, none of them have active functioning boards. So there's clearly a disconnect here. And I think what it is that most entrepreneurs assume that you need a ton of resources. It's going to cost a lot of money. It's going to be constricting. It's, board is there to stop you doing the creative stuff that you want to do. And so there's kind of an almost a negative perception, or certainly an idea that it's not something I do until I'm bigger. I've always taken the exact opposite approach. If I'm starting a business, I start with an advisory board. So even before I've got my first clients, I will go out to people that I want around me that can stop me making mistakes, that can give me key introductions. And so I'll go to these individuals. I say, hey, look, I'm looking at putting this business together. I'm looking for an advisory board. Got no money to pay you or anything like that, but I'm not going to ask a lot. It's basically going to be a virtual coffee once a month. And hey, look, if it takes off, then we can look at giving you some stock options or something like that. If it doesn't, no harm, no foul. And basically all you really need to do is get your first person to agree to that. And we all know someone that will agree to that. And then you go and get a few other people, preferably people from different industries, from different stages in their business career, people that can add value. And oftentimes they will do it. Sometimes they'll do it just because they lead slightly dull lives. Maybe they're kind of an exec mid-manager in a company somewhere. But like you're not looking for your Larry Ellisons or your Elon Musks to join your company, right? Because you're not going to get to them. But you don't need that either. And one of the examples that I give in the book is when I had a startup many, many years ago, kind of around the time of Groupon's big growth. And I was doing a similar sort of thing, but in employee fitness, employee wellness. And I'd gone out, I was trying to raise money at $1 million valuation to get my thing up and running. And then I realized that what I needed to do was to build the advisory board first. And so I went and got some people to join me. And I ended up with somebody from Yahoo, somebody from Google, someone from Microsoft. And because I could then leverage off those names, when I then went to talk to investors, it now became easy to raise capital at a $10 million valuation when I could barely raise anything at a $1 million valuation. Because what happened for the investors was they went, well, if you've got someone from Microsoft, Google, and Yahoo on your board, then crikey, I mean, this must be something special. Now, nobody asked who those people were. Like, it could have been the janitor. It wasn't the janitor. It turned out they were quite good people. But I didn't need their advice to be great. I just needed to leverage their experience and their brand. And again, it comes back to this idea of trust and your 3 R's, which is, especially if you're first timer raising capital, why would people trust you? They've got no reason to. So the way to shortcut the process is to leverage off other people's trust. If you can build an advisory board, the sort of the gray hairs that or the brand recognition that you don't currently have. It's a great way to shortcut trust and at least get in the door in a way that you would never be able to without that.
Brilliant. So then you went from $1 million to like, I think you 10x the valuation. Yeah. All because of that. And often I get asked, so why does this matter? Well, there's many reasons and you and I understand it, but I want to help the world to understand this. Often I get asked, and if there's some of you that are out there to say this question and maybe Callum's experience is hitting a little closer to home than you'd prefer, is you're saying, I'm struggling to raise, it's a low valuation. I know this thing's worth more, but nobody's giving me the valuation I want, whatever it is. No one's taking me serious. Very often I get asked all the time, I'm just starting out. Is anyone seriously going to give me money? I don't have reputation. I don't have relationships. I am a trustworthy person. I'm highly educated. I'm just entering into this new high finance world. Is anyone going to take me serious, or entrepreneurship? And the answer is probably not. But what you can do is what I put it, and maybe this is a crude term, but I'm like, you can rent the reputation, relationships, and results of other people by building your board of advisors. Because when you pitch an investor, whether it's a startup or a fund or a syndication, whatever it is, if you're asking investors, you're going to want to do the homework. And I always say, this is a ridiculous example, but if you're a fund manager or anybody, you can use this on anything. Imagine you got Ray Dalio, Warren Buffett, and Ken Griffin on your advisory board. You're going to go to an investor and they'll say, I've never heard of this Ryan guy, but I know those three other, look at the eyeballs that are on my money. This is amazing. I'm feeling really good about this. Similar experience happened to you. And so even though you start out, and too often we think we got to go out and you have this hero complex, which is one of the ways to tank your business, thinking that you got to do it all and you're going to be the one that swoops in and saves the day. No. Surround yourself where people are like, look, I don't know who this guy is, but his board of advisors, everyone's heard of Microsoft. Everybody knows who Warren Buffett is, whatever that is. And really just start building that up. That adds credence to the offering that you're extending into the market. Anything to add to that?
The fact that when I go out and I tell the story about my new business, I can talk about the bits and pieces and how it works. But before anyone will listen to that, they need to know why they will listen to. Why should they listen to my pitch about what the business is? And if I can drop into the conversation super early on, something that shows them that somebody else already has faith in me, it's that social proof. Yeah. Is so incredibly valuable. My good friend Daniel Priestley, so I actually posted on this yesterday. So he has a quote from one of his books, oversubscribed, which is that people don't buy what you want to sell. People buy what other people want to buy. And so I kind of bastardized that quote for investment, because what I see so many people when they go out looking to raise capital, they start a conversation even before the hi Ryan, how are you? They'll go straight into, I'm raising $2 million at a 20 million valuation for my start. And he's just like, oh, come on.
You must be reading my LinkedIn inbox.
It's just so painful to be on the other side. And it's so lazy, but nobody's telling them to do it differently. And so I posted a framework yesterday, which I call the case framework, but it's about starting a conversation about some cool stuff that you're doing with some interesting people. So if I started talking to you, Ryan, about, hey, I'm trying to raise money for an investor network thing, that's a very dull story. If I start talking to you about how I got the head of communications for the World Economic Forum to sit on the board of a company, and then I was able to attract this, like, now you're like, well, hang on, why on earth would she want to sit on, like, tell me about this company? So you start with the interesting bit. You start with getting people drawn in, and then you can get and then if you're interested, I can go into the details of what the growth opportunities are and, how many people join, all of that kind of stuff. So, I just think you and I get frustrated because we are investors and we get bombarded with really bad pictures, but equally in defense of those people that are constantly putting out those bad pictures, if you Google how to raise money, it's terrible. Like, it's basically based on this ideology from 40 or 50 years ago when investors didn't have any choice. They had to phone up their broker and place an order. An IPO was an exciting thing.
The internet didn't exist.
The internet didn't exist. Angel investing didn't exist apart from like a very small neighborhood in Silicon Valley. Like, it just wasn't a thing. And so if you had a good idea, you put a nice deck together, you went and pitched it, and people were so thrilled to have an exciting opportunity that they would respond. Those days are dead, long dead. And then we've kind of got things like Dragon's Den and those shows, which further this idea that us investors are somehow sitting here with a checkbook just going, I'm just waiting for the right idea. Like it's not how it works. Every deal that I get into, and I periodically kind of go through the stuff that I put money into, it's 99 times out of 100, it's because somebody I know and trust has referred the deal to me. And so you need to, if you're looking to raise money, you need to be focused on those trusted networks. You need to be focused on those people that can refer you, and creating those interesting stories. And again, it comes back to your 3 R's, but,
that's exactly.
You and I, we definitely get frustrated because we get bombarded with such rubbish, but I also have an empathy because I used to do that bombarding because I didn't know any better. And I think that's part of the biggest problem with people looking to raise capital is they're so focused on what they want that they can't get out of their heads long enough to talk to an investor with an open mind and genuinely figure out what the investor wants and how they can solve a problem for that investor. And I think when you can do that, it changes everything. And sometimes in that conversation with an investor, it will become abundantly clear that your product isn't the right product for them. And that's fine. Don't then pitch it to them and hope that they change their mind. Instead, introduce them to somebody else that might have the right product and maintain the relationship. That's so much more valuable than this kind of spray and pray horrible approach that is currently sort of in favor.
Yeah, I use a hunting analogy with that spray and pray is like, okay, your weapon of choice, so to speak, is more of you want to go hunting for capital with a sniper rifle, not a machine gun. Don't stand on the edge of the forest and start blasting off rounds, hoping you'll hit something. That is a horrible strategy, and it could very much hurt your reputation or relationships. The better one is actually hunt. Learn the patterns. What do they like to eat? When do they like to eat? And one of the things is, this reminds me, you mentioned we kind of arrived at the same conclusion from different angles. I have the 3 disciplines of capital raisers. I'm happy to share that. I haven't talked about this for a while, but when it comes to raising capital, it's the same thing is that what you talked about is it comes down to trust. And what I say is if you're just starting out, I adopted 3 rules when I started. Never eat alone, always ask about their story, and be generous. And the first time that happened, I met a guy who was building a 132 megawatt power plant, Alberta, right? Oil and gas, a lot of energy, and worth, we'll say, 9-figure guy. And so I just asked about his story, and I just want to understand, is he getting into deals? Is he getting out of deals? Where's the liquidity in his world? And so by asking about his story, over a cup of coffee, so it was like $2. So guys, you could do this. It's $2. Take a guy out for coffee. He'll take a free coffee. I met him right down in the basement of his office, and I learned about the story. And then I made a generous offer, said, hey man, I just finished grad school. I can help you out. I'll build you a financial model, and I won't even charge you. I just would love to participate in the deals in any way that I can, hang out with you and your friends. And I made a very generous offer. And honestly, that catapulted my career, that mentality. So that being said, going out and making an offer, and if you ever ask my advice, folks, one thing I'll tell you is never lead the potential new relationship by asking for something. It's always better to offer something, even if it's like, don't even ask for their time. So if you've done a job and you've hunted and you understand what they're into, you've read their website, you know what they do, you know what they like to do, what they don't, you know, whatever that is, and you've collected a reasonably good amount of information. And even if that opening email, the thing you offer is just an ego stroke on a deal they just closed or a show that you saw them on CNBC, whatever it is, just lead with generosity rather than asking for something. You're going to be way further ahead. So with that being said, my question for you, Callum, is how do you convince someone from your perspective to sit on your board? What would you say?
Cool. So let me come around to that question first, but just address that point because they kind of do add to each other. And I had a conversation the other day with Ron Diamond, who's like one of the foremost thinkers in the family office space.
Tiger 21.
Yeah. And so he had a quote which I loved, which is, if he meets a family office for the first time, he won't under any circumstances put a deal in front of them, even if they ask. He will only look to add value. And the most effective way that he can add value is to introduce them to another family office. And it's so easy and it's so right. Investors will join your network, not because of you, not because of anything that you do, although I'm sure you're lovely, but they will join to meet other investors in that network. Investors like hanging out with other investors. And because we're all trying to get the alpha on what the latest investment opportunities are and what we can learn. And so that I think is really, really key, is understanding that human psychology. If you become, and I interviewed a guy called Max Nee, who is based here in Asia. No, in fact, he was the one that introduced us. Yes. So, yeah.
Friend of mine, mutual friend.
So look, he's done an amazing job of once a quarter. He just brings together family offices. He doesn't pitch them. He doesn't have anyone there trying to sell to them. He doesn't sponsor he doesn't charge sponsors or anything like that. It's just a nice, safe environment for 40 or 50 family offices in Singapore to get together and have drinks. I guarantee you, if he phones any one of those people with a deal, they will take that call and they will hear him out because he's added value to them. And so there's the same kind of premise works in anything in business. And it's the same with, getting people onto your board seat. Is they might not be interested in you, but they could be interested in the other people on the board seat. I've certainly joined boards, not because of the company, but because of the other people on board seats. Sometimes I join boards because I am interested in that sector. I want to learn more about that sector. And look, again, if you're looking for the person that you have on your board, I think of everything as stepping stones, as a leverage point to the next point. So when in the Veblen Director Program, when we're talking about board seats, we say the next board seat you get isn't your final board seat. It's just a stepping stone to the one after that. And the same principle applies when you're getting board members. I might want and love to have Ray Dalio and Warren Buffett and Bill Gates and these guys on my board. It's not going to happen. But it's very, very easy for me to get the first person, like somebody I know, like, and trust. And, I'm not asking a lot of them. It's a very low commitment. Will you join? I then use them as a leverage point to get the next person in. And I use that person as a leverage point to get the next person in. And so, it's your point of renting reputation, but it starts with understanding, taking the time to understand what other people are looking for and how you can provide that. And it's very rarely money. Like, people say, I'm going to have to pay these board members. No, like a lot of the time you don't. One of the things that we teach at Veblen is how you position yourself to get these free board seats. So you offer it to come in as a free board member, and then how you leverage that over the next few months. And there's a ton of incredibly lucrative deals that you can put in place. Like, hey, if I introduce this investor to you, or if I introduce this client to you. And the other thing that happens is once you start sitting on 2 or 3 boards, then other companies come to you. And when companies come to you, like if I come to a company and say, hey, I'd like to sit on your board, that's what I want. It's not what they want, right? So I'm not solving any problem. And no company actually wants a board member. What we want is the solution that board member can bring. But if I'm sitting on 3 boards and a 4th company comes to me and says, hey, we see you're sitting on these boards. Would you be interested in sitting on our board? Then my question is, well, potentially I'm interested. What are the commercial terms? Because at that point, I've got choices, and now you need to make it attractive to me. But you have to be willing to do the work first and to do some voluntary positions, and get paid in experience and contacts rather than cash. And you'll find most people with ambition are willing to do that, to sit on your board to get that experience themselves.
Awesome. And do you have any strategies or tactics that you'd be willing to share for people just starting out as far as convincing them to get on your board? So we've got the principles, we've got the moral frame of why that's important and why you should and why you should not be seeking board positions, how to reach out, don't ask, but offer something of value to begin with. What have you seen to be effective as far as convincing someone to sit on your board when they've literally never heard of you before?
So I think starting with a complete stranger is a little bit tough. I'd probably try and go with somebody that knows somebody, get a bit of a warm intro. What I try and do is make it so easy for them to say yes. So look, everybody's busy, and anybody that you want on your board is busy. right? So what you don't want to be saying is, look, I really want you to join our board. I'm not going to pay you. I want you to come in and do half a day once a month. And I also want to phone you and pick your brains whenever I've got a question. Yeah, that's not a compelling pitch. Whereas if you start off with, hey, look, I'm putting together an advisory board. I've got some cool people in mind. I'd love to have you in it. It's not going to take more than 20 minutes, half an hour a month. Just literally, I'll phone you up, maybe ask you 1 or 2 questions. Some months I might not phone you at all. But hey, and look, if this thing goes somewhere, then maybe I can give you some stock options and you can meet the other advisors and that sort of stuff. That's a very compelling proposition. And look, if you're a board middle manager at Microsoft or Oracle, now you've got something to talk about at your dinner parties. Like, you can live vicariously through this young entrepreneur. That's more exciting than anything else that you're doing in your life. So make it easy for people to say yes, and it gets progressively easier. The first one to get in is the hardest, which is why I say, look, pick someone that you know will say yes, even if it's your mum, and then leverage up from there, because it gets progressively easier. Like, if you think about it, again, so I could lean on the Veblen network, and that was very deliberate why I kind of built that Veblen network. But once I got the head of communications for the World Economic Forum, I can basically ask anyone to come and join that board, and they'll join because she's one of the most connected people in the world. Like, but it doesn't have to be at that high level. Like, I didn't start at that level. I started with, like I say, the janitor at Microsoft. I've still got somebody from Microsoft on my board. That's better than somebody that doesn't have someone from Microsoft on their board. So yeah, leverage what you can.
Yeah, one of the things about, it comes back to R3, which I like call the circle of trust, and just developing trust and not leading with an ask, but an offer. So we've established that. Often one strategy that you've taught me, which I think is brilliant, is let's use raising capital, for example. So you take someone out, and the untrained person would say, I'm going to take out for coffee, and then I'm going to pitch you and then ask for the investment at the end. That doesn't end well for usually the person pitching, typically. But the better one, and you've talked about this, is you don't ask for money, you ask for trust. And don't actually say, will you trust me? It's not what we're saying. What you're saying is the thing to get in the beginning is not their capital, it's their trust and respect. And so you have this 3-month strategy. I would love for you. It's super quick, but just could you share with the rest of the world your 3-month strategy of earning trust that leads to capital instead of asking for capital that leads to distrust? How do you do that on in 90 days?
Yeah, so this I kind of learned this by accident, but it works incredibly well. And most people won't do it because they're so impatient. But basically, I realized that asking for capital for people that you've just met doesn't work. And so I knew I could leverage this advisory board. So what I did was I started asking people to join the advisory board. If you pitch it right, it's very easy. You can easily get 5 or 6 very cool people, and that's great. And then what I did, so my offer to them was like, this is going to be super easy, just a coffee once a month. But what I started doing, whether they wanted it or not, was each week I sent them an email update. These are the actions I've taken. These are the results that I've got this week. That was it. Just every Friday afternoon, boom, boom, boom. It was a good discipline for me. It held me accountable. And every week they saw that. Then sort of getting towards, after a couple of months, I said, hey, look, sometime in the next month, what I'd love to do is just to thank you for your time and advice, buy you and the other advisors lunch. I know this is obviously easier to do if they're all in the same place, but buy you lunch. You can get to meet the other advisors, and we'll just have a nice lunch, and that's it. Of course, they were very up for that. So I take them out for lunch. And at that lunch meeting, I said, look, you've seen what we've done over the last 3 months. I think I really need to raise some capital to take this to the next level, but I don't know anything about raising capital. Anyone got any ideas? And what I would discover was that, first of all, you've got people that say, well, I'd be willing to put a check in, because you haven't asked anything of them for the last 3 months. You basically have shown them every week you're taking actions, you're getting results, you're taking actions, you're getting results. And you've been transparent. And even the ones that say, well, look, this isn't really the sort of thing I invest in, but I can definitely put you in touch with certain people. And what I would say is, well, look, don't put me in touch. What I'd love you to do is actually to pitch them on my behalf. And then if they're interested, we can do the introduction. And of course, like, you've just bought them lunch, they're going to be agreeable to that. The difference between me telling someone that they should invest in your podcast, Ryan, versus you telling them that they should invest in your podcast is like, it's night and day. Like, they trust me because I'm a third party. I'm on your board. Like, yeah, it's just very, very different. And so by taking that approach, again, it's one of those sort of shortcuts that people won't do because they think, oh, yeah, but I need the money now. I don't want to wait 3 months. But ultimately, you're not going to get the money now by shouting loudly. It's just not how it works. Much, much better to build these long-term relationships, build trust, and then the money comes.
Brilliant. So start by asking for trust and the money comes in. Start by asking money and maybe distrust comes in. I don't know. But saying it louder and talking to more strangers asking for money is not necessarily the strategy I think that effective people do.
They talk about this in Silicon Valley. There's the sort of glib line in Silicon Valley, which is if you ask someone for money, they'll give you advice. And if you ask them for advice, they'll give you money. And this is basically an extension of that.
Same thing.
It's just sort of an actual tactic that works.
So build those trusting relationships that will lead to a qualified ask. Would you say that's a fair summary of that?
Yep.
Yeah. Awesome. So as we round third base, is there any piece of advice, maybe one, let's say one competitive advantage from your experience that you could leave behind for our listeners around the world? What would you say?
So look, I know I sound a bit like a one-trick pony at this point, but I do think that getting ahead, like if you're seriously ambitious about your career, then every single serious person in business has got a board seat somewhere else. So rather than thinking, oh yeah, well, that's something I'm going to do when I'm 70 and somebody taps me on the shoulder and offers me a board seat, do it now. Like, get on it. And I guarantee you, if you take the ideas, and by the way, I'll give all of your listeners a copy of this book, Boardroom Blueprint. I'm more than happy to give a free copy to your listeners. But follow the methodology in that, and you can easily get a board seat within 30 to 60 days. And if nothing else, when you update your LinkedIn profile to say, hey, I'm sitting on the board of XYZ company, you will be blown away by what the knock-on effects, the ripple effects that has is incredible. Like, I mean, we've had people that update their LinkedIn profile and within 24 hours, they've had 2 more offers of other board seats just because people had never viewed them through that lens before. So yeah, look, follow the tactics. And I think it makes the single biggest difference in your career.
Awesome. Okay. So thank you for that. And any closing remarks? So we've given an unfair advantage. You mentioned you wanted to offer that book or other things. How can they get a hold of you to capture that offer? How do they make that happen?
Sure. So if you go to probably go to boardroom-blueprint.com is probably the easiest thing to do. I hang out on LinkedIn. That's probably the easiest place to get me. Mention Ryan when you connect with me, and I will accept your connection. But look, I mean, this is me and you geeking out. This is just fun stuff to talk about. Like, it's we're clearly, there's a lot of alignment on values, audiences, and I think we've both realized the more we can help other people to raise capital, it rises the tides for everyone, and everyone benefits from that. So it's been a real pleasure chatting, and look forward to hearing from some of your audience.
Awesome. So just to summarize everything that we talked about, start with building trust if you want to build a network of capital. Build your board by just asking for trust or demonstrating that you are worthy of their trust. Then move in and start asking for the capital or any advice that might lead to capital. And then second, if you're reaching out and you're just doing it cold, don't do it by asking for something, their money, their time, their interest. Can I send you that? Start with a give, not I'm giving you an offer to invest in. That's not what we're talking about, but a true, genuine give and add value to their life. Demonstrate that when you're in somebody's life, things get easier for them, better for them, more profitable for them, whatever it is. Just make sure you lead that with a give. You do these things and you too will be well on your way in your pursuit of making billions.